You've probably heard the headlines: immigration is surging, our cities are bursting, and no one can find a place to live. There have been plenty of demonstrations, heated debates, and plenty of finger pointing. But when we strip back some of the emotions, the numbers tell a different story. Today, Dr. Andrew Wilson and I will unpack the latest ABS figures, what they really mean for Australia's population, and I guess more importantly, how this is going to affect our property markets. You see, the latest figures from the Bureau of Statistics suggest that at March 2025, a few months ago now, our population was 27.5 million. That's 423,400 people, more than the same time a year ago. Australia's population grew by 1.6% in those 12 months. We saw 315,900 people added from overseas migration in the last year to March 2025. The year before, there were 493,000 people. So, as always, I'm joined by Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market, for this week's Property Insider Chat. And I'd like to ask him about these immigration figures, the latest jobless figures, and how our auction markets performed over the weekend. Hello, Andrew.
Yeah, good day, Michael. And yes, we have those latest migration numbers. As you suggested, they're a little backdated, the March quarter this year, but they continue the trend that we've seen over the latter part of the post-COVID border opening period, and that's a decline in actual net migration numbers. But they're tracking around about what we're used to, about that 200,000 net new entrants per year in Australia. So, but that's what we've sort of been absorbing for quite a while now, those sort of numbers. And it really, until we had that sort of COVID locking of borders and then unlocking of borders, migration hadn't made that much of an impact on our housing market activity in terms of real demand, because that demand was pretty consistent from period to period. Of course, the lockdown did impact that, because we closed our borders. There are lots of predictions that the closing of borders and the end of international migration over the shorter term would impact the housing market. It didn't. In fact, the only impacts that we did have were from interstate migration shifts, where we saw a significant shift from the southern states into Queensland, particularly southeast Queensland, as those southerners, I guess, trying to escape severe lockdowns, particularly in Melbourne. And of course, that pushed the price of property rents and prices through the roof. And that's sort of continued in southeast Queensland, not just southeast Queensland, but right up the eastern seaboard of the state of Queensland is seeing significant prices growth. But as you mentioned, Michael, the numbers are starting to ease as we're getting back to a more normalised environment following the COVID adjustment period. And the government's also made some adjustments to migration policy, I guess mindful of the stress that it had been placing on infrastructure, particularly housing. And I think that the surge in rents that we saw generally was a factor in, the particularly international student migration. And we've seen those numbers coming down. But I guess a more of a normalised environment, Michael, in terms of migration. I don't think there's any implications here for the housing market per se. Those changes to international student numbers are obviously not welcomed by the university sector. But going forward, as I said, I think we're looking at more of a normalised environment, not just in the aggregate numbers, but also in the state data, which is again continuing to show Queensland as a very robust performer in terms of net migration. In fact, in terms of a net migration figures state to state, show that Queensland's actually ahead of Victoria in the numbers there. And that's in total, not just international migration, also interstate migration. So still, I think we've got some issues in the housing market for Queensland if we look at those individual state drivers, because I think that will continue to drive higher prices in particularly southeast Queensland, but not just southeast Queensland, but really most of Queensland is benefiting, can I say, from a surge in demand for housing.
Well, it's varying around Australia, as you say, but people are blaming immigration and students on our housing crisis. As we've said week after week, that's really one of the many factors involved, and changing migration isn't going to disappear. The government requires the migrants to come in, replace the retiring baby boomers, place, the millennials going off on maternity leave. I can't see the government changing its immigration policy anytime soon, Andrew.
I don't think it make any difference, Michael. I think one of the things that we perhaps need to look at in terms of migration is the skilled migration profiles. There's no doubt, and we've continuously said this, and we're not alone here, that the issue with Australia's imbalanced housing market lies on the supply side, not on the demand side. That's why it's problematic that we're seeing governments actually stimulate demand when that's not really our problem. Our problem is we don't have enough supply to match demand as it is, rather than create more demand. But as I was saying, that I think we need to look at the skill set of some of the migrants that are coming in. We're still seeing, Michael, and we discussed this last week, rising house building costs. And there's still a lot of chat in the industry that they're finding it difficult to find building materials and labour to match demand, which has been surging thanks to some initiatives from state governments in relation to higher density development, this year particularly. But it's still a problem in matching that the demand with supply, because prices are continuing to rise above historical levels. We need to question whether we're matching the need, particularly in the building industry, for the skills that would help us offset those higher labour costs. But of course, there's a lot of barriers in terms of matching skills, training levels, the heavily unionised workplaces, and that's fine. But, we need to have the balance. And that's the question that should be probably asked of the government. Are they providing the skills in migration rather than the actual volume of migrants? It's the skills of migrants that can enable us to build enough houses and units to match demand, which is continuing to rise.
I guess a lot of different industry sectors are wanting skills. The aged care workers, the nursing, the medical practitioners are all asking for more skilled workers as well. But that actually sort of leads into the second discussion I'd like to have with you today about the latest jobless rates. The unemployment figures crept up a little bit a couple of months ago. They were steady in August. What's happening with our employment figures? Because I'm sure that's one of the things the Reserve Bank's going to take into consideration over the next couple of months as it makes its decisions on interest rates.
Yes, we've seen the unemployment rate steady at 4.2%, where it's been for most of the past year and 18 months. And this is unequivocally a low unemployment rate. It matches the similar results as to our previous strong economic periods. We did see the job numbers falling by 5,000 over the month. They can move around from month to month, these seasonal adjusted figures. And also the number of unemployed was down by 1,000 over the month as well. Participation rate fell a little bit, Michael. We haven't been used to that. It's still at near record.
Still very high, Andrew.
Yeah, absolutely. But we've seen it really consistently at record levels. It's still very close to record levels and still quite high historically at 66.8%. And just to reinforce that, when we look at the historical pattern of participation in the workforce, and of course the participation rate measures the actual workforce compared to the potential workforce. In other words, those that identify themselves as either in work or looking for work compared to those that are actually in work. And we're still well ahead of the numbers that we saw typically during other very strong periods of economic activity. So a low unemployment rate, but a higher participation rate really does reflect a strong labour market and therefore a strong economy. No real bad news or signs of bad news for our labour markets. I think that the Reserve Bank would largely pass that over as being situation normal and focus more, as it has been for a while now, on the inflation rate coming forward. And of course, we have the latest inflation numbers coming up next week, Michael, for August. That will be very interesting given the surge or the spike in electricity prices we saw for July. And that may give, if that trend continues, that may give the Reserve Bank something to think about, I would suggest. But I do think it's a bit of situation normal in terms of our labour market. I think we can still be reasonably relaxed and comfortable about where we are in terms of the jobs market. And it's interesting as a contrast to the US, Michael, which has seen clearly some signs of a deterioration in its, up until recently, similarly strong labour market has shown some signs of weakening. And that was the catalyst for the US to reduce its interest rate last week for the first time this year. It's not that we are dissimilar on these figures to what's occurring in the US. So I don't think there's going to be a lot of implications in terms of the Reserve Bank's decision making. They will be very much focused on the inflation rate, as they have been now for quite some time, because they don't have to worry, particularly the latest data and the data as it's been for a couple of years, about issues in the labour market.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Well, in Melbourne next week, there's a religious holiday. There's the grand final, the AFL grand final. And that around Australia tends to bring a Super Saturday the weekend before with more properties listed for auction. How did the market handle this extra number of listings?
Well, as you said, Michael, it was the first Super Saturday of the spring Super Saturday of the year. And it is all about the bringing forward of activity because agents and vendors don't want to clash with the big weekend holiday in Melbourne. And also we see similar energy in other capital city auction markets as well. So we get a bringing forward of demand prior to the grand final weekends because, of course, agents don't want to clash with those distractions. And therefore we give it the name Super Saturday. It seems to be used for everything under the sun at the moment, but we did start using this a few years back, but I guess it's flattering to see everybody else is starting to use Super Saturday as an activity descriptor, but it was a Super Saturday as that demand was brought forward as we expected. In Sydney, we had 1,153 auctions, a good number of auctions there in Sydney, up from the 989 the week before, and ahead of the year before, same week, where there was 1,009 auctions. I guess the theory of supply and demand tells us that as we get more supply with fixed demand, we should perhaps have some downward pressure on activity measures in terms of prices, etc. And we measure that by clearance rates, of course, because then sellers have more competition because there's more properties going under the hammer and buyers have more choices. So you would expect that to maybe have an impact on clearance rates. But no, we've seen, and we do see it's more about what's happening in the actual cycle at the time rather than the differentiation between the supply going forward week to week. And we saw that at the weekend with Sydney, even though it had a big rise in activity numbers, another very strong result in terms of the clearance rate. Sydney, Michael, for Sydney, 78% clearance rate, up on the 77% from the previous week and the 70.7%. So still tracking around about 10% higher, that Sydney market compared to where it was a year ago. Same old story for Melbourne, 1,246 auctions in Melbourne over the Super Saturday week, up from the 1,184 the week before, but down a little bit on where it was for the same week last year at 1,335. But another very positive result for sellers in Melbourne, clearance rate of 75.7%, Michael, up from 73.4% the week before, and well ahead again, 12% higher than the 63.1% over the same week last year. And of course, this just continues to reinforce the revival of the Melbourne housing market, which was in the doldrums for most of I guess we could say 2022 through to 2024, particularly 23 and 24, but it's certainly revived this year. Brisbane, another good result for that Brisbane market in a relative sense. Anything above 50% is a positive for Brisbane's auction culture, 54.7% big numbers of auctions, 173 auctions. Of course, Brisbane, the AFL football team, will be participating in the AFL Grand Final, so perhaps there's no surprise that there was a bit of an extra impetus in the Super Saturday results there for Brisbane, particularly the numbers of auctions. As I said, up from 50 or similar to 55.8% the week before, and also similar to the year before, 53.7%, which of course Brisbane were also engaged in the AFL the year before. So a real same old there in terms of the data and the data drivers. Adelaide, strong result, exceptionally strong result in Adelaide. 166 auctions in Adelaide. Of course, South Australia is a strong AFL state, and so it again perhaps reinforcing the distractions of the following week, bringing forward supply. But 82.82% clearance rate in Adelaide, similar to the same period the year before and higher than the week before. And that Canberra market, we could just about call that market having turned now, the Canberra market, Michael. We've been saying there's been, consistent signs of a more positive auction environment in Canberra, similar to the other capital city markets, and a 71% clearance rate in Canberra, with 109 auctions there. So a big number of auctions for Canberra, up from 89 the week before, and the clearance rate well ahead of the same week last year, at 56.3%. So the Canberra market has also, similar to Melbourne, looks like it's turned the corner, Michael, and that the stimulus of lower interest rates has certainly picked up housing markets across the board, even those that were in recent times underperformers, such as Melbourne and Canberra, are certainly recording quite heady activity at the moment. And there's a real consistency about the activity in our property markets, Michael, which just does show the overarching impact of not only affordability with lower interest rates, but also the constraint, which we've already discussed, on an undersupplied housing market. And once we improve affordability through lower rates, it's almost no stopping demand coming through, taking advantage of that improved affordability in undersupplied markets. When we look at the longer term trends, they're all the same, Michael, as I said, reflecting that consistency, a revival from the early part of the year as interest rates fell, and more or less most markets are either at or above where they were a year ago when we look at the monthly clearance rate trends. And next week will be a quiet one, Michael, because we'll have the grand final, which many people will be focused on for the AFL particularly, but also, I guess, a bit of a break from property market activity. Melbourne in particular will have a real falling away in the number of auctions conducted, not so much in the other capitals, but I wouldn't expect that to have noticeable impact on clearance rates, Michael, because really demand it's really a seller's market at the moment, with buyers competing for whatever's out there. And we'll soon be talking about the September price data, which is coming up now. And I think that we will see, with these stronger clearance rates and now moving out of the midwinter period, which has been particularly strong regardless, some more upward pressure on prices going forward. But particularly
when you get together next week, that's what we're going to be discussing. It's going to be the end of the first month of spring next week. So look forward to seeing the latest My Housing Market figures in a week's time, Andrew.
Thank you, Michael. Yes, and enjoy the grand final.
Thank you.